Good morning, everyone, and thank you for spending your time with us this Monday morning. So, again, welcome to another series of our Bright Talks with Sun Life Asset Management. My name is Angel Cruz, and I am a Business Development Officer from SLAMC. And this morning, we will have the second installment of our Fun and Focus series for 2022. So last time we talked about our equity funds and our index fund. And this morning we will talk about another type of fund. So we hope that you will stay with us until the end of this episode. But before we begin, please allow me to introduce our company, Sun Life Asset Management Company, or we call it SLAMC for short, is a wholly owned subsidiary of Sun Life of Canada, Philippines. And as the investment arm of Sun Life in the Philippines, we are committed to be every Filipino's partner in their pursuit of prosperity. SLAMC has been advocating for financial prosperity since the year 2000, and being the largest non-bank asset management company in the country, we are managing a total of 16 mutual funds, or collectively called the Prosperity Funds, with a total of 181.4 billion assets under management as of end January. And the Sun Life Prosperity Funds are available through around 2,500 mutual fund advisors, 10 bank partners, 4 broker partners, and of course, our own direct online channel. And SLAMC's fund suite completes the risk spectrum from very conservative funds like the Peso Starter Fund. For moderate, we also have balance, or we have bond fund and GS fund, or the government securities fund. And for aggressive, we have equity and index funds as well. And for global exposure, we also have the World Equity Index Feeder Fund denominated in Philippine peso. And that same goes for the dollar space. We have our conservative fund, the Dollar Starter Fund. For moderate, we have the Dollar Abundance Fund. For balanced, we have Wellspring and Dollar Advantage Fund. And for the aggressive funds, we have the World Voyager Fund. But as I've mentioned, this morning we will be focusing on a specific type of fund, which is the Sun Life Prosperity Balanced Fund. And to help us understand what balanced funds are and how does this fit in your portfolio, we invited our Business Development Officer, John Natividad, to help us explain the features of this fund. So, hi, John. Good morning.
Hi, Angel. Good morning.
Hi, good morning, John, and happy Monday.
Happy Monday to us
Yes,
all.
we have about 105 attendees today, and perhaps every one of us here in the room this morning would want really to understand what balanced funds are,
Yes.
and again how this type of fund um, fits in everyone's portfolio. So probably you
Mm-mm.
could help us understand what balanced funds are, no, John?
Sure, sure. I'll be glad to help with that. No, and I think the best way to actually explain what it is to go directly at it, and let's we can actually get into what the balance fund is, diba? And for me, I think it's a fairly straightforward investment. To be honest, one way I could explain it is uh to explain also, or to get into what it's actually composed of, no. And quite simply, the balance fund is an equity fund and a bond fund combined, kumbaga, no. So as we've learned from the topic last month in the fund in focus session, an equity fund is actually primarily invested, or solely invested in publicly listed companies, either globally or locally, no? And on the other hand naman, a bond fund is invested in debt instruments, diba? Or bonds simply, as the name suggests, which is either issued by governments or private corporations. Now, medyo we've been getting we've been saying some words, no, and to help us understand it, we could actually backtrack to a slide that we showed last during the last session, during the last fun in focus chat sessions, no. So why are there stocks, why are there bonds, why, I mean, how are these investments, no? So if we think about it, these are actually ways or modes of raising capital for either the in corporation or for the government entity. So we discussed, we have corporations, businesses, and of course to grow, we need money, diba? So if let's say a restaurant chain wants to add more restaurants to their already growing portfolio, but they don't have the money yet, but they want to grow faster, they can either issue bonds, diba? Basically, bonds are utang eh. So pwede silang mangutang and have to pay interest to those who lend them money, or they could partner with someone who has the money, diba? And in this case, mutual fund companies, being able to pull money from different investors, can partner with them. And we have actually an example here. We have some recent examples shown here. So in terms of equity financing or diba, issuing stocks, we have Figaro filed for IPO last year. And diba, Figaro is actually a coffee chain company. So it actually depends about where they would want that. They could use that to grow their company. Sometimes they could use that for other means as well. In terms of debt financing naman, we have a Petron, a very well-known gas company naman, energy company, issued bonds. So instead of partnering, they nangutang na lang sila. So they issued bonds worth 18 billion. So meaning medyo fancy way of saying lang siya na nangutang si Petron ng 18 billion pesos.
Oh, okay. Thank you, John. No, that's a very comprehensive explanation or basic explanation of what bonds and stocks are. But for the benefit of our listeners this morning, John said IPO, no, and to spell it out lang, IPO means initial public
Yeah,
offering, correct,
correct.
John? And when a company goes on IPO, they are actually opening the ownership, no, John, the ownership of the
Correct.
company to the public, meaning
Yes.
you and I can buy a share of ownership of that company. For your from your
Yes.
example, it's Figaro, no.
Mm-mm.
So that's how the equity financing works, no. But John, you've mentioned also that in bonds, nangungutang naman yung company or
Mm-mm.
tayo yung nagpapautang sa kanila.
Mm-mm.
So I guess there is a difference, no, on how an investor would earn, whether through you will participate through the equity financing or you will participate through the debt financing, no.
Correct.
So
Mm.
in these two types of raising capital, we as investors, how do we earn, no?
Mm-mm.
Kasi it both involves giving our money to these companies, no? But as
Correct.
return, since we are investors, how do we earn from this?
So, yeah, this is actually a good question, no? And syempre, that's the bottom line that we are looking for. We are investing or either investing or lending money to these entities, institutions. How do we earn? And it's quite simple actually. Even if you take out the corporation side, diba? Investor corporation side, a simple let's go first to sa ano no, let's go first sa bonds. If you go to a bank and then you take out a loan there, either a home loan, a personal loan, 'di ba when you have to pay it back, hindi naman yung niloan mo lang yung ano hindi lang naman yung niloan mo yung amount of money that you have to pay back. You have to pay back. How do you pay the bank? How does the bank earn from that? You are charged an interest. And the same thing is true for bond offerings. No? So effectively, those who invest in bonds or those who lend out to institutions, like for example here, Petron, it is noted here na there's actually a fixed interest rate equivalent. There are two series. No? There's a Series E bond. Ayan, medyo nasa article na siya. There's a Series E bond for 6 years, and then a Series F bond naman. So for the first series, the interest rate is actually 3.44% per annum. While for the other series, it's 4.33 or 4.34% per annum. So basically that's it. How do we earn through bonds? Through interest, and that's guaranteed. That's guaranteed, and the one who is has issued the bond, or those who we have lent to, is required to pay that amount, and nothing more naman, versus what was agreed upon, no. In terms naman here sa equity financing, it's a bit more it's a bit different, no. So we can see here, as Angel mentioned, during the IPO kasi there is a set price per share. So here we can see that well, originally the price per share was for the Figaro IPO, the initial public offering, was originally set to 1.28. I think this was actually updated, but we can reference here naman lang for our example. And when you actually buy into that, so let's say you bought 100 shares, over time that doesn't stay at that price naman eh, that price level. It will either go up, 'di ba, as the business grows, or it can also go down if it faces challenges. But syempre, you would only invest in businesses and ideas that you think would prosper, especially over the long term. So let's say you buy a certain amount of share from Figaro. You bought 100 shares from Figaro today, and then let's say after some time, it has grown to, because the business has grown through the cash infusion that the investment has delivered. At least madaming nag-patronize sa Figaro, the numbers, their sales went up. It could develop, diba? It could go higher, and let's say for example the 1.28 became 2 pesos, 3 pesos. So the number of shares that you have has also gone up in price, and eventually you can either sell that, diba? You can keep that, you can do what with it what you will, diba? So that's one way of you can of investors being able to actually earn from equity financing through capital appreciation, diba? When your investment has actually grown in market value. The second way naman is a little bit different. It's called dividends, no. So sometimes, as we've mentioned, possibly, diba, the sale of the company that you invested in went up, and they have more money than they're used to, and they have more money than that they know what to do with, diba? Wala na tayong nakikitang pwedeng paglagyan itong money na to grow it even more. What the company can actually do is they can decide to issue back or return that money, to distribute that money to its shareholders. And this process is actually what we call dividends, no. So some companies are more regular when they share dividends, some are not, diba? Kasi especially growing companies don't issue dividends as well, as much as other companies do, because they keep reinvesting it in to their business, diba? Pero some companies would issue dividends, and that's another way for investors who invest through this method, through equity financing, to earn from that. So just to a brief recap or to summarize, through equity for equity financing, um dividends and capital appreciation is how an investor earns, and then through from that financing naman, it's through interest, no. And then going back dun sa original topic natin, which is balance fund. So effectively, this is also how balance fund investors would earn, diba? And it's not just one or the other. That's the good thing about the balance fund. It's a combination of both. So from the equities side of the fund, you earn through dividends and capital appreciation. Because through the bond side naman, the debt financing, you will also be earning through interest. So it's a really diversified portfolio. So I hope that
Okay.
that explains the
Yes, very clear and very straightforward, no, John. So, as you are showing here, no, for in equity financing, an investor can actually earn in two ways: in dividends and capital appreciation, and in debt financing is through the fixed interest, no. But going back, John, going back to what balance funds are, which,
Mm-mm.
as you've mentioned, is a mix of equity and fixed income instruments. How would this translate into the fund portfolio?
Okay. Sige. So for that I think I'm sharing a slide here. So as we've mentioned, as long as a portfolio includes bonds and equities, we can call that a balanced funding. And we can see here the fund fact sheet for the Sun Life Prosperity Balance Fund. This is downloadable from our website by going to the short link, which is also noted here. No, it's sunlife.co/balance. So this is updated monthly, and it shows the holdings of the mutual fund as of the dated time. So we can see here the top equity holdings. We're showing the top five. These are very well-known companies. So we have here SM Investments Corporation, SM Prime, Ayala BDO, and then Ayala Land also. Ayala Corp and then Ayala Land. And then we also have the top fixed income. These are different treasury bonds for maturing at different years. So we have 2024, 2025, 2023, and then 2020, 2036. Ayan. So yun yung medyo long-term natin na fund. And we also actually have our very own Sun Life Prosperity Peso Starter Fund, which is a money market fund. So meaning medyo conservative ata yung investments team natin sa bond side. So some of the holdings that we're keeping it at the most conservative, which is effectively a money market, no. We can also see the sector allocations here. So it's also noted 31% is placed in holding firms and conglomerates, and then around 20% is in property, around 19% is in banks and financial, and then the rest ito like we have utilities, consumer, retail. Uh and then I think what's more interesting to me personally is actually looking at the investment mix. Eh. So here we can see that around 60% naman is in equities. So this is what we've mentioned. Eh. Around 60% is in equities, and then we have a little under 1% is invested in REITs, and then the rest being at bonds na. So here we know how it translates to the fund itself. We can see here that around 60% is in equities and around 40% is in bonds. Na. So that's how it is currently with our balance fund. So to also share, diba, for the information of our attendees, balance fund would actually have different asset allocation strategies. So this is actually how the fund manages which type of asset it directs its resources to, no. And for the Sun, at least for the Sun Life Prosperity Balance Fund, we have what we call the neutral allocation. So kumbaga ito yung medyo default niya na settings. Default niya na settings if all things are equal, no. So the neutral allocation is actually 50% for the Sun Life of Canada Prosperity Balance Fund. However, as we saw earlier from the bond fund, we have naman what we call equity overweight allocation. When we say overweight, what this means is just really it's leaning more towards that asset class. No? So in here, and this is actually how the fund is represented right now, 60% of its investments is in equities, while the remaining 40% naman are in bonds, no, or liquid cash assets. So this is how it is right now with the Sun Life Balance Fund. On the flip side naman, this is actually the maximum na pala, by the way. This is the maximum allocation in terms of equities that the balance fund can go to. So hindi na siya pwede mag 65%, let's say, or 70%. So ito na po yung pinaka maximum niya. In terms naman of the flip side of that, no, it can go as high as 60% naman sa bonds. bonds investment, and then 40% sa equity investments niya. And also very same, this is also as the maximum that it can go to for its bond allocation. So it shouldn't be significantly higher than that na.
Mhm.
Okay?
Okay. Yeah, thank you, John. No, and I really like this slide, no, John, because for a typical investor, when they say
Mm-mm.
or when they hear kasi the word balance or
Mm-mm.
the term balanced fund, what what comes into their mind is really 50%
Correct.
equities and 50% fixed income.
Mm-mm.
But little did we know that it can really be, flexible in terms of
Yeah.
doing asset class allocation. And as you've shown here, no, you can go as much as 60%
Mm-mm.
equities or 60% fixed income, and then the rest dun naman sa ano no, sa ibang asset class. And I
Correct.
also like what you mentioned about having kahit a slightest exposure
Mm-mm.
to the asset class, it makes it a balanced fund, no? So whether it is 80% equities or 20% fixed income, that is still considered as a balanced fund, no?
Yeah.
So
Mm-mm.
I think that is very helpful for our listeners today. Kasi nga, di ba, yung connotation natin ng balanced funds is really 50-50.
50-50, yeah.
Yes. But in reality, it can be more flexible than that.
Yeah. Oo.
Okay. So thank you for that, no, John. And looking at and hearing your discussions and your explanation what balance
Mm-mm.
funds are, maybe we can go on to the next topic, which is the advantages
Yeah.
naman of investing into a balanced fund. So perhaps, John, you can share with us some of the advantages in
Mm-mm.
investing in a balanced fund.
Okay. So a balanced fund, being a mutual fund, would also share the advantages of investing in a mutual fund, no? But I think what we can highlight for now are the top three, no? I would say. Number one is professionally managed. So the slide that we discussed before this was on the weights, diba? Like which weight the fund would lean towards more. Is it going to be the uh equity side or the bond side, diba? So this, hindi lang siya simpleng ganun eh. It comes with research, diba? So why are we leaning towards equities, for example, right now, diba? Is it because the investment managers are more optimistic towards the equity side, towards or versus the fixed income side? So these things, and especially the management of it, while we can do it, especially with all the platforms that we have online now. This one can be done naman by a typical investor. But quite frankly, if you are someone who is, diba, a salaried employee, who has the time, diba? If you're investing, let's say you're able to invest 10,000 pesos per month, um, who has the time? And then you'd also have to ask yourself if it's worth it to do all your own research, and then be moving your assets depending on what that says to you on your own, or if you could just outsource that, diba? Outsource that management, that research needs to someone whose job it is to do that all day every day, diba? So that's one advantage that we could have. Another key advantage that a mutual fund would actually, or also a balanced fund, would have is liquidity. We all know this naman, special hopefully from our MF 101, while you can invest directly in stocks and in bonds directly. Actually selling them off would require a willing buyer per se, diba? Most of the time that would happen, but there are certain stocks that are less liquid than others, walang masyadong active traders of it. So sometimes if you need the money right away, but you don't I mean, you may not be able to sell it, diba? During that time of need. So the good thing about a mutual fund and a balanced fund is that we are actually required kumbaga, release or sell buy back the shares that the investor has is the investor is selling back to us. But number three, I think this is one is the one really that highlights what a balanced fund is. It's really diversified, diba? When you are investing in a mutual fund, it's already a diversified basket of assets. So if you buy an equity fund, an index fund, that's already a number of equities within that fund. That's not just one stock. And when you buy a bond fund naman, that's the same thing. But when it's a balanced fund, it's even more diversified because it's investing in both those asset classes. And the thing pa with a balanced fund, and I think we could highlight this later, especially is bond exposure, no. So the bonds kasi that it has in its portfolio effectively cautions us from shocks, from impacts, while at the same time the equity that we have in that balance fund would also not leave us wanting naman, especially when appreciation happens, when there is growth in the market, and when there is growth in the economy. So that's the beauty of a mutual of a balanced funding. Kumbaga, it's present in both, and the professional management side is able to swing whether where the growth is, and to protect us naman in case it is needed, diba? Ayun.
Okay, so
So yeah, go ahead,
yes.
Asa.
Sige. That sounds really good, no, John? Especially when you talked about liquidity. Kasi I just
Mm-mm.
remember on the article that you showed kanina, yung example mo on Petron, the bonds that they are issuing or
Mm-mm.
or have tenors of 6 years, and I forgot the other tenor, no, but
Mm-mm.
let's just say the 6 years, no. So if you are about to lend money to Petron, you have to wait, or you have that lock-in period of 6 years, no. But
Mm-mm.
but again, as you've mentioned, for a balanced fund, you do not have to worry about that 6 year tenor, diba? Or that 6 year
Correct.
maturity,
Yeah.
because the fund um, is always ready to buy back the shares that the
Mm-mm.
investors want to sell, no. And I also like the one that you've mentioned about diversification with bonds exposure, because as for the benefit of our listeners, the minimum of this fund is just 1,000
Correct.
pesos.
Yeah.
And with 1,000 pesos and investing in a balanced fund, you already gain exposure to both equities and bonds, diba?
Yeah.
So very affordable, and again, very diversified agad
Mm-mm.
yung investment mo. So again, that really sounds
We've
very, yes,
mm-mm.
John?
We've actually shared during the Fun and Focus last month, diba, na one doing an investor trying to do it themselves, diba, investing in, let's say, the Philippine Stock Exchange Index, around 100,000 yung needed niya to meet the maximum. And then most bonds naman that are available to the retail market, that would cost around 50,000 to 100,000. So siguro someone who wants to do it by themselves, mga 150,000 yung kailangan nila. Compared naman sa what you mentioned, diba? For the bond balance fund, it's 1,000 peso minimum. So
Mm-hmm.
you don't have to keep that money. You can actually try and consider investing as early as you can with especially the Sun Life Balance Fund.
Okay, thank you for that, Jano. And I think by now our attendees may already be interested, no, with the things that you've shared.
Mm-mm.
Our attendees may be already interested in opening their own balanced fund accounts. And probably you could share the considerations naman, no, that they have or they should take
Mm-mm.
before applying for one.
Mm-mm. Sure. So, again, those who have already attended a fun and focus session would already be familiar with this slide. But it's here because it's really true, no? So medyo it's this these are really the considerations an investor, an interested investor must think about before they jump into investing in anything, actually, for that matter. So number one is investment horizon. How long do you think you would be willing to invest, diba? Like, for your goals, especially in Sun Life, we try to encourage goal-based investing. Think about how long would you need your money before investing. And diba? What's the time horizon of your goal? Number two, this is kind of similar to investment horizon, but also totally different altogether, financial situation. And here what you would be actually asking is, okay, let's say my time horizon is retirement, diba? It could be 20 years. I would be retiring in 20 years, so my investment horizon is 20 years. But you have to ask yourself, is the money that I have now something that I could keep, diba? This is just for question. Something that I could keep for the long haul as well, for 20 years, diba? That's the financial situation consideration naman. In terms of risk appetite, this one naman is how well you assess yourself, how well can you accept volatility, because as we've mentioned, investments would have ups and downs, diba? So are you someone who is able to sleep well at night knowing na yung investment mo went down, or are you someone, diba, na are still comfortable and would be able to uh kumbaga, continue the course, stay the course, even if you're saying na even if you're seeing that your investments are taking a tumble. Now, going specifically to the balance fund, this is actually an investor. This is actually for an investor who has a medium to long term time horizon, no. And then someone who also knowing that, syempre, you also have to be able to set aside money, diba? In terms of financial situation, are you someone who has already an emergency fund for the medium to long term? Sorry, are you someone who has already the emergency fund, diba? So hopefully, if you have that, then you have a caution already. Then probably you're someone who can invest over the medium to long term. And then also similarly, in terms of being able to accept risk, diba? In terms of risk appetite, you are someone who should be able to accept medium to high levels of volatility. This is of course mainly brought about by the exposure of the balance fund in equities. Actually, mas volatile yung equities natin. But also bonds can also be mildly volatile sometimes. So siguro to show you where the mutual where the balance fund lies, diba? Especially when compared against other mutual funds. We have here the this is actually sometimes called the capital asset pricing model, no, or CAPM. No. It describes the relationship between risks and the expected return for certain assets. So CAPM is sometimes widely used throughout finance for pricing securities and generating expected returns for assets given the risk of those assets. So we can use this to get an idea of where the balance fund is. So here is where the bond fund is. Where the fund lies in the spectrum. No? So you can see here na yung return niya is not as high. Pero yung risk appetite required for it and the time horizon that is also required for it is also not as long. On the other hand naman, we have the equity fund, which can be more rewarding, especially over the long term. But again, as we've mentioned, the risk that the investor must be willing to take in order to invest here is should be higher, actually quite higher than the bond fund. And I hope we already get the idea. The balance fund naman is somewhere in the middle of that, no. So the balance fund would have a medium term high term horizon and also a medium risk attached to it, and its return naman would be right about in the middle rin.
Oh, okay, no, John. I think this illustration is very helpful to understand where the balanced fund falls, no, into that risk spectrum. So again, as you've mentioned, it is somewhere in the middle, not too conservative and not too aggressive, no. So for those investors or clients who are, their risk appetite is also somewhere in the middle, then maybe they can be, or they can look at this balanced fund, no. So given that balanced fund has equity component, John, you've mentioned it is a mix nga of equity
Yeah.
and bonds, no. Um, And if, for example, I am really or I am really investing for the long term,
Mm-mm.
and I can stomach in volatility, probably you could share to us, why not just go for an equity fund if it somehow behaves the same and it's
Mm-mm.
both for the long term naman.
Correct. Actually, I can relate to that question, Angel. No? So I think it's also a function of my life stage. Medyo I'm a bit on the parang, well, when I started actually investing, I was on the younger side, not so much now, pero I was on the younger side, and also I don't have any dependents with me. No? So that was also a question of mine. Parang sabi ko, why if my goal is really long term and growth in terms of investment, why not just invest purely in equity funds? And then if I need naman, let's say I need short term money, why not just invest in either a bond fund or a money market fund for my short term needs? So medyo na ano ko yung equity fund, na overlook ko yung balance fund before eh. But hopefully we can share why our audiences shouldn't be able to overlook it now. So we can see here siguro to provide a more visual representation. We can see here the fund price movement of someone who has bought the Sun Life Bond Fund. No, this is actually since fund inception. The graph shows since fund inception until that was in way back in 2000, the year 2000. And up to the year 2022, siguro around January 2022 ito. So you can see here na yes, the fund price, this is someone, by the way, that invested 10,000 pesos in the fund and then just left it there. So you can see here na itong bond fund, it goes up and down, but not so much, kumbaga. It's very tame. And this would be more understood when we compare it versus the equity fund naman of Sun Life. No? So someone who has invested in the equity fund, this is how their mutual fund share prices would have moved throughout the years. So you can see here na when it goes down, it really goes down, di ba? Ito na, when it goes down, it really goes down. But when it goes up naman, it really outperforms naman. So you could see here there are certain times talaga na there are certain years actually na mas mababa siya
Mm.
sa bond fund. But then when it goes up, medyo malayo yung nag-outperform talaga siya versus the bond fund naman. No? But again, when it corrects due to market news, diba, it goes down significantly and again overtakes the bond fund. Now, where does the balance fund lie in all this? No, and the balance fund is we will show it here now. The balance fund is the yellow line, and you can see here na again it's somewhere in the middle, no. So in the earlier years when the equity fund is lower than the balance fund, nagda-drop din yung balance fund, but not as much. But and then again when the equities pick up, the balance fund also picks up, but it doesn't drop as much. It doesn't pick up as much then because this is of course due to the equity component. Now again, someone who is just really kumbaga hyper focused on returns would ask, diba, why would I again invest in the balance fund, diba, if the equity fund outperforms naman? Actually, you would appreciate the balance fund during times of during times of need or during times of crisis actually. So that much has been felt, like the most recent of which is the COVID-19 recession, and then we also had the 2008 global financial crisis, no. So you can see here that the equity fund really went down, but if you were invested in the bond fund, in the balance fund, it would have not gone down as much. The same thing is true for the 2008, back in the 2008 global financial crisis. And then of course, what's good about the balance fund naman is when investments pick up due to its equity holdings, hindi ka rin naman naiiwan na pag-iiwanan, di ba? So you can see here, if you were just invested in the bond fund, this is where your investments would have risen, pero those who are invested in the balanced fund were also greatly benefited by the around 2012 2013 rating upgrades that were received by the Philippines. No? So siguro we can show it more in here in numbers. No? So for the COVID-19 recession, during this particular period, ito yung naging, kumbaga, movements ng fund natin. No? The bond fund barely grew. The equity fund went down 44%, 'di ba? And what if you were someone who needed that money then, 'di ba, around March 2020? So medyo stuck yung pera mo at those levels of losses. But if you were in the balance fund, your investments were cushioned greatly by the bonds then. So mas limited lang yung losses mo. Again, the same thing was true for the financial crisis of 2007 and 2008. So again, the times where you would really appreciate the balance fund is during the times of crisis, no? So, syempre pag up yung market, medyo it'll leave you wanting, sabihin mo na sayang sana nag pure equity, nag all in na lang sana ako sa equities. Mas mataas yung kita noon as shown naman dito sa Fitch investment rating upgrades that we received. But then during times of crisis, you would really appreciate it na, okay, I was in the balance fund, not as much yung losses ko. And again, as we've mentioned, just to repeat it, no, in times of prosperity naman, of ratings upgrade, diba, when the market is good, the balance fund doesn't leave you, ano naman parang at a loss, diba? When you compare the bond fund return na 18.13 during that heyday period, significantly up naman yung balance fund natin at 51.85% return. So I think this is really for someone who is an investor na in the middle yung ano niya, yung kumbaga risk return appetite niya. Okay?
Okay.
So siguro sige, go. Go ahead, Angel. Pero
Sige.
I'll show it na rin here. Siguro someone who has an investment goal of 3 to 5 years, we have here the sample goals, no? So an education fund, if you are, let's say, someone who is working and want to study in 3 to 5 years, you can try and save up your fund here. If you are willing to purchase a house or get married, these are sample goals that you could have, and you could try and begin saving up for these goals using the balance fund.
Okay. Sige, I was just about to mention, John, that on your previous slide, I think the returns are very helpful to, for visual people, no, on how to appreciate really the beauty of a balanced fund, especially during the down markets, no. So the down market. So as you've mentioned nga, hindi kasing sakit nung bagsak, no, ng equity fund, yung down ng balance fund. And I think that's the balance, or that's the bond fund coming into play, no. That's where the bond funds coming, or the bonds coming into play. So as you've mentioned nga, bonds really provide cushion and stability in the portfolio, in the fund over the long term. And we've seen that during down markets, like when COVID shocked the world, and during the financial crisis in 2007 and 2008. But I also like the fact nga that you've mentioned na during an uptrend market, hindi naman iwan, no, si balance fund. Because 51% is still 51%, and correct, it's very decent, diba? So you really more appreciated on the down market na hindi ka naman masyadong bagsak nga. Again, you have that cushion provided by the bond exposure of the fund. Okay, so moving on, John, you've also mentioned about the goals, the examples of goals, no, for the medium term, and you're saying here the fund is really good for medium term goals like 3 to 5 years, no. And you've also shown the returns of the fund, but maybe you could also share to us, no, how the balanced fund performed lately.
Sure. Yeah. Okay. So as of February 2022, the 1 year return for the balanced fund was actually around 6.02%, no? And then for the year to date naman, when we say year to date, meaning the first business day of the year up to February 2022, it has returned 2.45 percent. But our yeah, this is the return actually for the ano. And I
Okay.
think it's pretty decent naman, if
Mm-hmm.
I may say so myself. Yeah.
Yes, and I think since you've mentioned a while ago that the portfolio of the balanced fund now is tilted towards the equities, and 60% of the fund is invested in equities, and given the fact then that the market rallied no from the start of the year, that probably explains the positive returns also of the balanced fund.
Yeah.
But also to ask now for the benefit also of our listeners this morning, given this uh, green returns or positive returns, is it still the right time to enter the market, or would you say this is the good time to invest in a balanced fund?
Okay. So, well, I would say yes. I would say yes, but again, to reiterate siguro, no, and to also provide some background or context for our listeners is, again, let's go back to the current portfolio of the balance fund. How is it being managed right now? And we've gone through it na 60% yung current investment natin in equities, and then 40% in bonds. So what's currently going on in the market, no, especially in the Philippine market? Number one, we all know na it's the presidential election year not today, this year. Historically, presidential elections have been positive for the Philippine Stock Exchange Index, no? So we can see that the PSEI ended positive during the inauguration years of the last 5 out of 6 presidents, with the exception of Duterte. So for Duterte, however, it was not, of course, we're not blaming Duterte, because there were global efforts, the global developments towards the end of his inauguration year that impeded the index from ending on a positive note. But we can actually still consider na, even if it was a negative return for that year, or negative ending for that year, actually hindi siya sobrang, not as much, 'di ba? Not as much yung decline niya. What we have to remember is that the Philippines is actually a very consumption-driven economy. And what happens during election years, we are all familiar with election candidates that are going around right now, trying to drum up support for themselves. So during these rallies, we would know that this actually acts as a boost for our economy, because it creates spending, not just from the so kumbaga politicians who are let's say buying handouts, 'di ba? Buying, not handouts, pero buying yung mga food for their supporters, 'di ba? But also the supporters themselves, 'di ba? They would also organize different activities, and that creates spending that fuels the growth in our economy. Number two naman is, we're actually seeing reopening and actual reopening of economies as of this time, no. So taking a look at the graph here, the blue line is actually representative of new COVID cases, while the orange line naman depends or represents the number of deaths, diba? So in January, we saw that there was this new highly infectious variant, yung Omicron, which has caused the most recent spike in cases now. But what we're actually more interested to look at is the ICU utilization rate, brought about by this recent high of cases. And we can see na yung ICU utilization rate natin, di ba, from September 18 to 2021 to January 17, 2022, it's not as high. What we know is the ICU utilization rate is a key factor for our government organizations in declaring stricter quarantine measures, diba? And even when we saw the very high COVID cases this first quarter of the year, we no longer declared ECQ, because one of the factor of that is the ICU utilization rate didn't go over 60%, diba? We're around at 49% for the entire Philippines and then 58% for NCR. So because of this, we didn't declare this strict quarantine. Growth is less constrained, and with freer people and freer economies, mas open yung economy to growth. So again, this would have a good impact to the balance fund naman in return. Siguro another thing, we've actually shared this slides previously na rin, but to reiterate, the Filipinos are not the only ones who are investing in the Philippine market, no. We can see na actually the peak of the foreigners can actually invest in the Philippines, and these foreign investments can actually drive up the market and also the prices of the investments that we have here, no. We've mentioned the 2013 Fitch ratings upgrade in investment, and that was actually also the peak of the percentage of foreign ownership in the Philippine market. But since then, actually bumaba na siya ng bumaba up until itong around third quarter of 2021. But what we are actually seeing now is it's actually coming back, no. So the foreign ownership is coming back, and this additional foreign direct investments can actually push our market up as well. So siguro just to summarize it all na, so those market drivers and market kumbaga initiatives, the PSEI target that we have for the end of the year is 7,900, no. Right now the index is around 7,212. Actually medyo bumaba siya because of especially the Ukraine, diba, the geopolitical issues that we have right now, especially on the global stage. And if ever we are able to meet this target of 7,900 na forecast, it's actually an upside of around 9.53% return, no. And of course, the balance fund being highly invested in overweight in equities right now would again also benefit from that. So again, this is actually a good time to invest to answer the question. No? Siguro just to also recap, just quickly lang on the interests naman on the fixed income side. The BSP has actually shared that they're trying to do this balancing act, no. Although actually global interests kumbaga are kind of saying na okay, we're ready to raise interest on the global level. BSP, our central bank, says that it has room to actually keep interest rates low. And siguro to remind us lang na this is actually the effort that the BSP is doing in trying to drum up kumbaga the economy, drum up investments, diba? Because if there are lower interest rates, then businesses would be more encouraged to take out loans, take out loans for their business endeavors. And this is the effort of our central bank to actually stimulate our local economy here. So over this year, we're seeing na BSP, I think BSP will really try its best to maintain its interest rates. But there are again global news that may change that, but not in the short term, baka in the more on the medium to long term.
Okay, thank you for that, John. No? And very helpful that you've shared some of the market drivers that we are seeing right now for the balanced fund, most especially. And as you've mentioned, the target of our investments team for year end is at 7,900. And I think that will be very helpful for our audience who are kind of interested to get in the market right now, especially right now, John. No, because I think over the past week we've seen the market really somehow correcting because of the geopolitical noise nga in
Correct.
Ukraine and Russia. So, okay.
Actually,
So,
just to share na lang siguro, no, some of our clients were actually, kumbaga, in retrospect, they were, kumbaga, nanghihinayang, na, okay, actually, nung March pala, had I invested, I would have earned this much na. So, the current downturn that we are experiencing, you could think of it also as another opportunity, diba? Especially if you have long-term money for investment, you can again see this as an opportunity to actually buy back during low periods.
yes, that is correct. Okay,
Mhm.
so I think right now, John, I'm seeing a few questions in our Q&A pod. But for all our participants this morning, if you have questions for John, if you have clarifications on the things that he've shared, please utilize our Q&A pod for your questions. And later on, we will answer those. No, but before we go into that, let us have a learning check first. No, and I think we will launch a poll to answer these questions. No, so the first question goes: balanced funds are combination of fixed income instruments and bonds. Answer A if you think that is true, and B if you think that is false. No. So for the second question, um, how do investors earn through stocks or equity financing? I think we've tackled this early in the early part no, of the presentation. Is it A through interest, B through capital appreciation, C through dividends, and D both B and C? Again, the question is how do investors earn through stock or equity financing? And lastly, for the third question, balanced funds are more diversified than equity funds, especially in terms of asset classes it invests in. No? Is it A true or B false? So there you go. We have just 3 learning checks just to check if you were able to get the information or the details that John mentioned this morning. And we'll just wait for the results of the poll. Okay, so there you go. I think more than 50% participated in the poll. And for question number 1, 59% answered true. And that is actually correct. No, balanced fund are a combination of fixed income instrument. Sorry. Actually, the answer here is false. No, because balanced funds are combination of fixed income instrument and stocks or equities. No, actually, in terminology, fixed income instrument and bonds are just the same. No, so the answer here is false. For number 2, how do investors earn through stocks or equity financing? And I'm glad that 73%, no, 73% of our participants answered correctly. So that's through capital appreciation and through dividends. And lastly, balanced funds are more diversified than equity funds, especially in terms of asset classes it invests in. Again, majority of our participants answered correctly that the answer is true because balanced funds invest in both stocks and fixed income or bonds. So there you go. There you have our learning checks, no? And again, before we go on to the Q&A portion, let me just share with you some of the key takeaways, no, that we've got from John's presentation. So again, the balanced fund, the Sun Life Prosperity Balanced Fund, invest in both bonds and equities. And one of the advantages of this fund is for your portfolio diversification, and it is good or it is perfect for medium to long-term investment horizons. And again, as I've mentioned a while ago, the minimum initial and the minimum additional investment for this fund is just 1,000 pesos. So again, with just 1,000 pesos, you may start investing in the Sun Life Prosperity Balanced Fund. Now that we have more clarity on the balanced fund, you may be considering starting your own mutual fund account with SlamC, or adding to your existing account. And since we are still living in these uncertain times where our family's health and safety out are of our utmost importance, we would like to encourage everyone to take advantage of our various digital platforms. So please feel free to take a screenshot or take a photo of this screen so that you can save all the links that can help you in your digital investment journey. So these platforms are available to both new and existing investors. So we will be showing a short video later on how you may conveniently open an account online and our next events, no? And then after which we will proceed to the Q&A portion. So here, when you visit our website and you visit the Sun Life Prosperity Balanced Fund page, this is the screen that you will show. This is the screen that you will see, no? And if you scroll down a bit, there are links there that where you can download the latest fund fact sheet of the fund, the prospectus, and even the product highlight sheets. So if you want to know more or read more about the balanced funds, you may download these reports, no? And if you are decided, no, to buy or to start investing through the Sun Life Prosperity Balanced Fund, you may now click the Buy Now button, which you can see on the upper right side. So, okay, so I think for the next is we have the video.
Want to start?
So we have the video on how you can start investing online. So please watch this.
Want to start investing in the Sun Life Prosperity Funds? It takes only a few steps. Go to www.sunlifefunds.com to know the different types of mutual funds available. When you find the mutual fund that fits you best, click Buy Now. Accomplish the online application page. Upload a clear photo of a valid government ID with signature. Read the terms and conditions. Click Agree to accept. Review your order details. Select the mode of payment. That's it. Easy, right? A confirmation of your subscription will be sent via SMS or email. Congratulations! You're now officially a Sun Life Prosperity Funds investor.
Okay, so indeed, investing using the MF Online app is as easy as 1, 2, 3, no? And for those who will be investing in this fund, you may qualify to our ongoing online promo, which runs until March 31, 2022. So invest at least, for new clients, invest at least 10,000 to 20,000 pesos or 19,999 pesos. And you may get as much as 125 pesos rewards, no, in form of gift certificate, no. And that there are tiers. If ever that you would want to invest more than 10,000, then you may also claim or you may be rewarded with higher amount of GCs, no. So again, this promo is extended and it will run until March 31, 2022. So you still have one more month to avail this. And for the whole mechanics or the promo mechanics, you may scan the QR code that we are flashing right now, no. So again, this promo will run until March 31, 2022, and the minimum investment is just 10,000 pesos. And if you need to brush up, no, on the basics of savings and investing as well as mutual fund concept, we would like to invite you to our next Mutual Fund 101 webinar, It will be on March 18, 2022 at 2 p.m. And you may register at the link that you can see in your screen. And additionally, for the next episode or the next part of our Fund in Focus series, we would like to invite you to the next installment of our Fund in Focus. And our next topic is actually another type of balanced funds. But for this time, it will be focused on the Sun Life Prosperity Achiever Funds. So we hope you can join us. This is on March 31, 2022 at 10 a.m. Again, you may register at the link that you can see on your screen. So, okay. So by now, let me call on John to answer some of your questions. No? So John, I hope you're ready to answer. We have about 10 questions in our Q&A pod. No? So, okay. John, for the first question, no, the weights allocation, I think this is pertaining to the one that you've shown on the neutral, equity overweight, and fixed income overweight scenarios of the fund. No? So the weights allocation, our prosperity balance fund, does it automatically swings to where the fund can get better returns?
Yeah. Okay. So yes, that's actually correct. No, so this was asked by our guest, si Janet. That's correct. And this is the advantage of the balanced fund and the mutual fund in action. As you've mentioned, it's professionally managed. So if our investments team deem that this particular asset would be outperforming, then that's where the resources, that's where the funds again, money will be directed to. So yeah, that's correct.
Yes. Okay. And just to add to that, no, John, I think our investments team, they have the monthly investment committee meeting where they also present their views, no, in different asset types. And based on their scorecards, they also maintain a scorecard where, they can justify their outlook or their overweight outlook on a specific asset class. So it is, yes, you are correct. It is very flexible as to the weightings, no, the weight allocation, as long as it is supported by, of course, their research and of course of their outlook. Okay, so the next question goes like this, how long or how short in terms of years an investment portfolio should be in order to be considered as long or short-term investment?
Okay. So for this one, I think this is actually, there's really no set, no. So I think in reality this would be depending on the person in terms of their investment horizon. But me personally, what I follow is if I need the money within 1 year, that's very short term for me. So usually pag ganyan, I would keep my money in talagang assets that are not volatile at all. So that could be actually I keep it in the money market fund, no, in the Sun Life Peso Starter Fund. If it's around 2 to 3 years, I think I would need it within that time frame. This you could consider the bond fund naman for that. As we can see in the graph that we've shown earlier, it's not as volatile as an equity fund would be. Pag around 3 to 5 years, maybe, or even 3 to 7 years, maybe this is the time range that you could consider the balanced fund for. So if you would be needing that your money within that time frame, you could consider the balanced fund. And then anything longer than that, you could consider pure equities investment naman, like the equity fund or the index fund.
Okay, thank you for that. And I think the slide that you've shown a while ago, John, can also serve as a guide. No, you've mentioned a while ago that the investments in this type of funds can be for your medium or about 3 to 5 years goal. No,
Yeah.
and that also uh, relate to the movement or the cycle of the markets that this fund is investing in. Okay, so for the next question, I think this is about the geopolitical risk, no, or the geopolitical developments we are seeing in the news right now, John, no. So in relating to the Ukraine and the Russia geopolitical tensions, how would you think this will impact the Philippines and ultimately this fund?
Okay, so actually that's the most kumbaga um well that's a very relevant concern that we have now, no, and that's also like I feel like it's an unfortunate scenario, no, that's a crisis, that's a human crisis, but going back in terms of economics, diba, and its impact especially in the Philippines for us here, as an emerging market, I think we are actually less we don't really have a lot of direct kumbaga direct there will be no direct impact to the Philippines per se. Well, not no, pero very little direct impact to the Philippines brought about by this crisis. The effects of it would more be felt through indirect means, meaning through gas prices, energy prices, di ba? Kasi Ukraine and Russia are actually big importers of gas, and I think those who are driving would already take note of how much our gas prices are right now.
65 per liter na, John.
Grabe. Yeah, and I mean, you could think of it as just gas, but what you have to think is how do goods move, diba? So how does the food in our groceries get there? These are all these are all kumbaga a function of they get there through being moved by logistics companies, by trucks which use gas, diba? So if these costs are maintained at these high levels, eventually that would have an effect on the food, or the utilities that we have, the food that we have, and that could cause inflation to go higher, no. Pero in terms of indirect impact, it would have an effect, pero pag direct medyo very very few, no. But I think what we could also I've already mentioned this, but I think what we could also take up on this is kasi usually markets would have parang would overreact to geopolitical issues, no. Although very unfortunate nga ito nangyayari sa Ukraine and sa Russia, 'di ba, you could there are some silver linings na you can see, especially in the Philippine market, like one of which is yung investments that could have originally gone to that part of Europe. Possibly some of it could go back to the Philippines, no, in time. So especially right now, since we are seeing na again there are tendencies to overreact to market, and medyo down nga yung markets natin, especially as of last business day, diba? Medyo nagkaroon ng downturn talaga. You could also take this as an opportunity to kumbaga invest for the longer term, no. Especially dun sa mga nagre-regret na hindi sila naka-invest during the pandemic, then this could be another kumbaga another call for you to consider long-term investments.
Okay, thank you for that, John. No, and thank you very much, John, for joining us today. We'd like to answer all the questions from our audience, but unfortunately, no, that is all the time that we have. Actually, we've already extended and we've got 15 minutes of your time. But again, thank you so much, John, for shedding light, no, to and explaining to us what balanced
Thank you.
funds really are. And just before I let you all go, no, just a few thoughts for all of you, no. Achieve your brighter life. Have a goal, commit to start, and make investing a habit. So again, these are the links or the websites that can help you learn more about Sun Life funds and Sun Life platforms. Again, you may take a screenshot or a photo of this slide so you can follow them and you can visit the links, no. And for more information and updates, please follow us in Facebook, Sun Life Philippines, or you may visit our website at sunlifefunds.com, or you may email us at slamc.ekyc@sunlife.com.